Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today's Wednesday, July 19th, 2023. With me is Becky Alley. Hi, Becky.
Hey, what's going on, everybody?
Good morning. Just in time. Also joined by Mr. Harvey Freed. Good morning, Harvey.
Good morning, everyone.
Good morning to you, sir. And this podcast, as always, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number. Producer, director Roberto Beauchene, he's in the booth making sure that we don't lose power, as some people around the country have, getting texts from all around the country, tornado warnings, all that kind of thing. It's been a hot and crazy summer. Speaking of hot and crazy summer, right now, Becky Alley, I really like what's going on in the market. The market is really positive. It's really strong. Becky, there's lots of activity. There are a plethora of buyers out there right now. So we're in the middle of it right now. We're in the middle of the battle. We're in the middle of the heat. We're in the middle of the summer. We've seen a huge pickup on the street. We've seen a huge pickup in the market, right? We need to tell people right now what's going on, because there's a need right now for housing. We know there's a lack of housing, but we have to tell people they've got to get in now because prices aren't coming down, right, Becky?
No, they're not coming down, and we're right where we want to be, right in the middle of the battle, the trenches, the negotiations, making sure our buyers are, shining in the best light, as always. And it is busy. And anyone that's saying that it's not busy and it's slow, they need to reevaluate what they're doing and who they're talking to, because every day, all day, we are literally getting new purchase agreements coming in. Some of these buyers have been looking for a week. Some of these buyers have been looking for 3 months. It just depends on what their market is, what they're looking for. We have a lot of first-time home buyers taking advantage of these down payment assistance programs. But I will say this, there is a lot of other transactions that come to us that started with other lenders. And I take pride in the fact that people kind of lean on us a little bit when things do go south. Let's just say their agent can't control who they initially were pre-approved through. They had a relationship. But what I take a lot of pride in is that when something does tend to lean a little bit sideways, they have the confidence in us here at Capital Mortgage Funding to see it through. Because getting a mortgage, I talk about a lot, is a big deal. Things do come up. We do our best to set everyone up for success, but not every lender is the same. And there's a lot of buyers out there that some people have bought 2 or 3 houses and they still don't even know what they did the first 2 times, right? So, I know Harvey's really big on the education piece. You need to make sure you're having the conversations now, whether you're trying to buy in 6 months, a year, 3 months. Don't wait, and then all of a sudden you get an eviction notice from your landlord because he wants to sell the house and make money on the home that you're living in, and you never took the time to invest in yourself to even know what your future could look like.
Well, Becky, let me stay with you for a second, then Harvey will go with you. But I want to stay on this topic for 1 second. If we know prices aren't coming down and we know there's a lack of housing, those that stay in the market, they're winning, right? Those who have quit, they're going to lose out because more people are coming in behind them anyways. So those people that have stayed in the market, they're winning.
It's just the law of averaging. Okay. So even if you're sitting there trying to hit 103, free throws, and you stop at 10, you're never going to get 100, you're never going to meet that number. So you can't let it beat you in your mind. And it's very emotional. We do this for a living. We understand and we have empathy that our clients do not. And we also understand that there's some new agents out there that don't sometimes have the grit to keep going. You can't be beat mentally and expect good results. So if you are a first-time buyer, if you're a repeat buyer, if you're a step-up buyer, if you're trying to buy a second home in Florida right now, you have to continue in your constant pursuit of what your goals are and align yourself with the right people. Because when you align yourself with the right people and you stay true to what your goals are, you will see the results. It's just a matter of time.
I agree with that. Harvey Freed, let's talk about renting versus buying right now. We know that rents have gone up, and we'll go over the statistic later in this podcast, but the realization that renting is not a long-term solution when prices and rents, price on homes and rentals are continuing to go up. But we know, Harvey, because we've been doing this a long time, the time is right for people to buy when their financial position is right for them. When they've got it all together, they shouldn't quit looking because it's a tough market out there. They're going to get left behind. We do know this, and I feel stronger than ever saying this to you, Harvey. We know that rates are going to come down. We just don't know when. But let's just say they come down in 2024, at the end of 2024, going into 25. But I'm going to say 24. Why shouldn't they buy now, Harvey? Because they're going to get the house at a lower price, and then they can refinance and build in equity. They'll have that built in equity because we know a year from now, 18 months from now, prices aren't going to be lower.
I like that message that we're sending, and we're all on board on it. It's really buy now because that's what you need to do for your family, is to move in the next direction. If you're a renter, then continuously throw your money out in rent. But if your job stability is very good in whatever state you're living in or region you're living in, if you've got the funds to close and the credit, then you should become a home buyer and take advantage of home ownership and the appreciation that home ownership will give you. There are families that will continuously rent. With that being said, waiting is not a good recipe. In fact, whenever we run into a family that waits, they're either waiting on getting us their documentation, they're waiting on us running their credit report, they're waiting on discussing the funds that are available. It usually becomes a pretty big problem. In fact, I opened up a can of worms this morning, and sure enough, one of the borrowers, the lady in this case, she's ready to go. She's a wonderful borrower. She's got money saved, great job, everything perfect, great credit. And then the fiance has been lying to her, lying to us. And again, had he reached out to us several months ago, we would probably have him in a better position to be on the new mortgage. Anyhow, I like our message that we're using: experience, knowledge, education, and then putting it all together and getting all these documents so that they're able to be very aggressive and get an offer accepted in today's market.
Yeah, I've seen Becky, Alley. I've seen that, remember, we always said that the average age right now is 34, 27 to 41. That's the average home buying age right now. And what I'm seeing is that when these people of that age group, 27 to 41, are jumping in their market, all of their friends are either in the market or jumping in because there's a fear of missing out, right? They want to buy that house. They understand a trend in the market. There's a saying, the trend is your friend. Okay. So if stocks are trending up, the market's trending up, there are trends that you have to take a look at. And even the biggest contrarian, maybe I'm one of them, maybe the biggest contrarian should jump on the home buying scene right now because the scene is hot right now.
Yeah, I mean, it's, we often talk about people just stand in line to stand in line, right? They don't know what they're standing in line for. But if you're doing something, you got stuff, I want stuff too. So people tend to follow the leader a little bit. So if you're the leader amongst your friends group, or even if you're downsizing, you also have to do what's right for you. And doing things just because other people are doing isn't always the right answer. But at the same time, if it's ready for you and you're no longer wanting to rent, then you need to start the conversation. And we need to make sure that, people are not just doing things to do things, because then at the same time, when you are writing these offers and you're trying to win this offer because you want to beat somebody else, then sometimes you have buyer's remorse because you're getting in a situation where maybe the house is less desirable. Maybe there's some things that you had to fix, and you think it's going to be the last house that ever showed up. You also have to understand that we're not here to sell you. At the end of the day, we're going to give you sound advice that works best for you, but you are ultimately in the driver's seat, regardless of whatever that house is. And if you do a private home inspection and it comes back that there's things on there that make you feel uncomfortable, it's okay to let someone else have that, right? You're not going to stay in a toxic relationship just because you think that person's the only person that exists on the face of the planet. Same with the houses. Like, it's okay. Throw the fish back. That's not for you. But if you're really handy and you're not afraid to fix some trim, maybe there's some water damage in the basement, those kinds of things, that's up to you. I'm not a Bob the Builder. I'm not good at stuff like that. So that's not a house for me. So you have to know what is for you will be for you. Whether that's your friends, you're not your friends, whatever they're doing, you can't get caught up in that noise. And you are right, Harry, to that point where people kind of get caught up in like, well, their cousin's brother, sister did that. Everyone's situation is different. Every house is different. What you're looking for is different than your friend. What rate they got 2 years ago might be different than what you have. So you have to stay true to what you are looking for personally, but stay true to your goals too.
I love that, Becky. And as you stated, buying real estate isn't like fishing. And I know Harvey opened up that can of worms. Worms are already good for fishing. They're only good for fishing. When you open up a can and there's a bunch of worms, or you look under that rock and those creepy crawly things are creeping around, it's never good. But I want to go over it's stat time, Harvey Freed. Statistics say rents have increased to pre-COVID levels and are only going higher. More apartments are being built now to capitalize on the housing inventory shortage. That's an ouch, big ouch. Up on average over $470 or 30% in the last 2.5 years. That's another ouch. Chicago, Charlotte, Boston are top three, anywhere between, how about this? $2,200 and $2,400 a month is the average.
Yeah.
Which means they're higher. You know how much money, and that's an ouch for a third time. You know how much house you can get for $2,400, $2,500, $2,600 a month, Harvey? I mean, you can get a lot of house. You can get about a $225,000, $234,000 mortgage. And if you put a little money down, it's about a $250,000, $260,000 house. Why are you going to continuously pay 100% interest rate on rent? So I feel stronger than ever, Harvey Freed. Rates are going to come down. They're going to come down in 24. And why? Why are they going to come down? I feel like I have to give out the why. Well, the Fed is doing everything they can by raising rates the last year and a half now to put inflation in check. And everybody out there, the only thing, the driver of higher rates is inflation. So if inflation is at 4, 5, 6, 7%, rates are going to go through the roof. And that's why they went in such a short period of time. Inflation seems to be calming down right now. So rates, other than a rate cut, maybe a rate hike this week, maybe we're going to see rates start coming down, maybe end of the year, 2024 for sure. It's also an election year. 2024 is an election year, everybody. You know what happens when there's an election year. Things starting to get calmer. They want to put the best foot forward. And even though the Fed isn't tied to politics, yeah, right, we're going to see rates come down. Last, certainly not least, Sir Isaac Newton quote, "What goes up must come down. We just don't know when." If you throw an apple in the air and you stand under it, it's going to hit you in the head. That's a certainty. We just don't know when rates are coming down. So a little bit about that. The time is always, Harvey Freed. We said it. It's only right to buy a house if it's right for you, right?
There's a lot of steps in home ownership, but let the builders go ahead and give the answer to America, to anyone out there thinking whether I should buy or rent. Well, there you go. The builders, multifamily housing and the permits for multifamily housing are double that of single family housing, because the builder said, wait a minute here, I'll build it. I'll build a rental community and I'll just collect the rents, because for all those folks that don't want to become homeowners and get a piece of what we're talking about successful home ownership, appreciation, wealth building, and all those great things that home ownership, community development, your kids living in a community with their friends and family, having the elementary school down the street. That's all what the American dream's all about here. So even the builders are giving us the answer. When you see them putting up multi-family units, they're even wanting a piece of the landlord action. So stay away from that. Again, if they're doing it, that's sort of the heads up that you should consider home ownership. So yeah, do not wait. I'm going to add another word. We talk about education, knowledge, documents, credit, funds, truth. Everyone lives their own truth out there, and you have to get on board with us. So we'll add another word that's important in your future becoming a homeowner, your own truth. What's your credit like? What's your job situation like? If you're planning on living in a community and not moving out of state, we think home ownership is for you. And you should definitely give us a phone call right away to start those conversations now versus 6 months from now.
I actually love that. I
believe that, Becky. Yeah, go ahead and expand on that, Becky.
Yeah, so I love that. So you're right. Everyone is their own truth. That's so perfect. And the truth is that you are paying someone's mortgage regardless. Whether you pay your own or somebody else's, you are paying someone else's rent, mortgage, whatever. So why not invest in yourself if you can? And the truth is about the rate that everything is cyclical. We are in a phase We are in a refinance boom for 10 years. So that way we could get everyone in the industry. We did our best job to refinance anyone that was in a bad mortgage in the early 2000s. So we are in this giant refinance boom for over 10 years. And now here we are, the rates are going up. We're in a cycle again. And to Harry's point, we are going to see the rates drop because it is a natural thing. If you put it on paper, you see it time and time again, that things happen. And the reality is right now, the housing inventory is the lowest it's been since 1999. And
Right.
realtors are finding that they're struggling finding, homes for these buyers. So that's all why you need to stay in the pocket. Don't get out, because it's worth the fight. Your future and what you're trying to do for yourself is worth fighting for, and finding that perfect house, because it is out there. You just got to take the time. You got to weed through the stuff, and there's new homes coming on the market every day. And if you keep pushing forward, the law of the averages will go in your favor.
I love it. I want to switch gears a little bit with you, Harvey Freed. Refinancing right now is on the rise. Yes, just a little, but it is on the rise. And maybe that's because people have settled into the notion that the rates are going to be where they're at right now, and paying 7.5% is a lot better, Harvey, than paying 18 to 22% on credit cards. And yes, they have to tear up their credit cards after we do it, maybe keep one or two. But isn't 7.5 better than 18 to 22, Harvey?
Yeah, for sure, Harry. Tough pill to swallow if you refinanced in 20 or 21 or 22 and you're in that 3 or 4% range. Tough pill to swallow. If you're above 4.5%, 5%, then the math's not going to lie to you. The math will show you that getting something, whether it be in the sevens, ultimately will help you, especially if you're consolidating $15,000, $30,000, $45,000 worth of credit card debt. We also see families paying off other liens, windows. They've had their windows done on their house a couple of years ago. They've got some furniture bills out there, the same as cash. We know that these 12 months, same as cash, 24 months, no payments. If you don't pay on the due date, then you get hit with the 23% interest charge for the last 2 years, driving up the price of furniture. Window companies make a lot of money, and furniture companies do, just being the finance company on that. So families have to take a deep breath and look at their overall picture and be thankful that they became homeowners earlier, because now they're sitting on some equity, and getting on your feet tomorrow is a lot better than waking up tomorrow and praying that your debts just disappear. There's no magical one. So get more people.
I'll also throw in, Harvey, I got to step on you a little bit, Harvey, because it's also with the pickup that they're gaining in equity. If they go ahead and pay off the credit card debt, then they're going to be way ahead of the game. They're going to wipe out the debt. They're not going to go ahead and dissipate the equity that they've had, because it's built it in, and they're just going to take a little bit out to pay off the debt. I want to reiterate that we do not advocate using your house as a piggy bank. The however is, you got to pay off 18 to 22% credit card debt. Becky Elliott, I want to give you the last word, but before we give you and Harvey the last word, go ahead and introduce our show on 97.1 FM this Saturday morning from 9 to 10. Who's on our Hardcore Mortgage Real Estate Business Show?
No stranger to our show whatsoever. It's been a little bit since she's been in the booth, so I'm happy to have her back. It was long overdue. We have Miss Michelle Sayward from eXp Realty. She's also going to be bringing with her another guest, Susan Wise. She's also from eXp Realty. So you're going to have two extremely knowledgeable veteran agents in the booth with us this Saturday on 97.1 from 9 to 10. We also air it live on Facebook. Do not miss it. Michelle is traveling the world nationally, also globally, doing real estate in other countries at this point. I mean, she is just, taking things to the next level. So anytime she can bestow some of her knowledge on us and our listeners, it's always going to be a good time.
We love having knowledgeable realtors on. We've got a run of knowledgeable, extremely successful, informative realtor partners on our show, and that's the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number. Harvey Freed, last words for the day.
The last words are, yes, we're seeing more and more families now considering home ownership. We're getting to the part of the summer where some of the reason and the motivation is to get the kids into a new school district. So we're urging families to really get themselves set up. Again, we have all these words that we use in our industry, but one of them is documents. I'll pull out one of our words that we have here, documents. If we can look at your documents and we can do an application over the telephone and completely run you through the system, these hour-and-a-half meetings that I used to sit down with families, we can get these and get you set up for success so that if you find a house over the next couple months, you'll be able to close at the end of August before school starts. So we think now in the next couple of weeks, it's imperative. And also another reminder out there, we have great lenders all across the state of Michigan. Some of the best in the country are right here in your backyard. Please, and my message today, do not click buttons and deal with strangers. You don't even want to hear the conversations. That's a whole different podcast. I'm going to start recording the conversations of the inexperienced and brand new loan officers struggling and saying whatever they want at the top of their mind. They don't even know how proration of taxes work here. So it's been really interesting the last couple of weeks as I played the part of new buyer in Michigan, clicking buttons and seeing who they're talking to. And it's not good out there. You do not want to talk to these strangers.
Well, you have to align yourself with the proper team. I want to thank my team, Becky Alley, top 1% of all originators in the United States. Becky, thank you. Mr. Harvey Freed, over 30 years experience, co-host of the Hardcore Mortgage Real Estate Business Show with Becky Alley, heard every Saturday morning, 9 to 10 on 97.1 FM. Want to thank both of you again. Want to thank all of our listeners from all around the country. And I know people are listening in Ireland today and Scotland because the British Open's going on there. It's called the Open Championship. Also, thank you to Roberto Beauchene. He's our producer director. He's in the booth. For everybody out there, this is Harry Glantz, Hardcore Mortgage Real Estate Business Podcast for Wednesday, July 19, 2023. And we'll see you soon.